So those are the two big determining factors on how we're able to get the exact same, almost the exact same monthly payment on a $650,000 house and an $850,000 house. Is the jumbo loan product doesn't require private mortgage insurance. Hey, how's it going? Thank you for joining me on this week's episode of The Real Deal. This week, we're going to be talking about how a $650,000 house and an $850,000 house can have essentially the same monthly payment with a slightly larger down payment. So let me explain. So I'm going to talk about a $650,000 house using conventional financing and the other using a jumbo type loan. Now, I know jumbo sounds scary, but what is a jumbo loan? What type of a product is this? Anytime you're buying a house above $650,000, whenever you're financing above that, then you're going to switch into jumbo loan territory. Now, if you're buying a house at $550,000, $450,000, $650,000, you would be using a conventional loan product within conforming loan limits. Now, they each have their own benefits and downsides. That is going to play a role in how it is that these two very different price points are able to give you the exact same monthly payment. So first, let's talk about the $650,000 price point. So at $650,000, you can buy with as low as 3% down. And with 3% down, you're going to have private mortgage insurance. Unless you're putting 20% down or unless you're paying additional money to prepay your mortgage insurance, then you're going to have private mortgage insurance on your loan. So at $650,000, 3% down, PMI with a 720 credit score is going to be right about $400 a month. On top of that, your interest rate's actually going to be a little bit higher as well with conventional financing. It's going to be about a 4.75. So I'm using a 720 credit score right now to base that off of. Now that's off of today's rates, April 2022. That could obviously change throughout the year. Now, when I ran those payments, those metrics, the payment came out to be about $4,000 for that $650,000 house. The exact same buyer, same credit score, buying an $850,000 house with 10% down. So we are going from 3 to 10% down. The payment was almost exactly the same. Now, why is that? Well, two of the big benefits with conventional or with jumbo loan products right now is that you can buy with 10% down and not have any private mortgage insurance. So that $400 a month that the conventional loan had on there, it's gone. And then on top of that, the interest rate, because of the lenders that I'm working with right now, they've adjusted their comp plans and they're making less per jumbo loan. The interest rate's actually lower on the jumbo product. So at $850,000, that same exact buyer would have a 4% interest rate. So those are the two big determining factors on how we're able to get the exact same, almost the exact same monthly payment on a $650,000 house and an $850,000 house. Is the jumbo loan product doesn't require private mortgage insurance with 10% down. And then also it's a full 0.75% lower on the rate. Now, of course, we're talking about a difference between 3% down at $650,000, 10% at $850,000. And I understand that could be a big jump, but if you have some money in your 401k, if you have some money in your savings, if you just sold a house and you have some equity, this would be a great opportunity for you. If you've been thinking about buying a house, why not go for that $850,000 house with some additional down payment as opposed to the $650,000 house? Think about how many more homes you're going to have at your disposal, how less competitive it'll be at that higher price point. If you've been thinking about buying a nice ranch property, or if you've been thinking about buying like a nice big 2-story house, 4,000 square feet, depending on location, I mean, that would just open up a lot of opportunities for you. So reach out to me. I'd love to have a conversation with you. I have a ton of other products available to talk to you about. I look forward to hearing from you. Take care.